He stole roughly $200 million from ordinary investors. Then Hollywood put Leonardo DiCaprio in his shoes and turned him into a hero. This is the story of Jordan Belfort, a man who built one of the most notorious boiler rooms in Wall Street history, lived like a king on other people's savings, and walked away from prison in under 2 years. The victims are still waiting to be paid back. Belfort was born in the Bronx in 1962, the son of 2 accountants. He was not born into money. As a young man, he was a hustler, selling everything from meat to seafood out of the back of a truck. The businesses failed, but he learned one thing that would define the rest of his life. He could sell. He could pick up a phone, talk to a stranger, and make them hand over their money. In 1989, on Long Island, New York, Belfort founded a brokerage firm called Stratton Oakmont. On paper, it looked like a respectable Wall Street operation, complete with a name chosen to sound old, established, and trustworthy. In reality, it was a machine built to separate people from their cash. Belfort and his partner, Danny Porish, filled the office with young, aggressive salesmen, handed them scripts, and taught them to never let a customer hang up. The pitch always sounded urgent. The opportunity was always closing. And the broker on the other end of the line was always one step ahead of the person he was talking to. The scheme was a classic pump and dump. Stratton Oakmont would quietly buy up huge blocks of cheap, obscure penny stocks. Then the brokers would work the phones, cold calling thousands of investors, hyping the stock with high-pressure scripts and promising the deal of a lifetime. As the orders flooded in, the price was pumped higher and higher, and at the peak, when ordinary investors were buying in at inflated prices, Belfort and his insiders dumped their own shares for a massive profit. The price collapsed. The customers were left holding stock that was nearly worthless. At its height, Stratton Oakmont employed more than 1,000 brokers and was involved in stock issues worth over $1 billion. The firm was the lead underwriter for the public offering of dozens of companies, including the shoe brand Stephen Madden, which went public in 1993. Behind that deal was a secret, illegal arrangement to hide how much of the company Belfort really controlled. The money came in faster than Belfort could spend it, and he tried very hard to spend it. There were mansions, luxury cars, a yacht, there were drugs, and a culture of excess inside the firm that became legendary. The office wasn't run like a bank, it was run like a party that never stopped. And every dollar funding that party came from someone, somewhere, who had been talked into a stock that was designed to fail. But schemes like this leave a trail. By the early 1990s, regulators were circling. The Securities and Exchange Commission filed its first major action against Stratton Oakmont back in 1992, accusing the firm of operating a boiler room and manipulating stocks. The pressure never let up. In December 1996, the National Association of Securities Dealers expelled Stratton Oakmont from the industry, and the firm was shut down for good. Then the FBI came for Jordan Belfort. In 1999, he was indicted for securities fraud and money laundering. He pleaded guilty. He admitted that over roughly 7 years, his operation had manipulated the stock of at least 34 companies and defrauded more than 1,500 investors, with losses adding up to around $200 million. And here's where the story turns. Belfort cut a deal. He became a cooperating witness for the government. He wore a wire, recording his own friends and business associates, and he handed prosecutors the evidence they needed to go after the people he had built his empire with. His cooperation paid off. In 2003, he was sentenced to 4 years in prison. He served just 22 months at a federal facility in California before walking free. The court ordered him to pay back over $110 million in restitution to his victims. But that money has been painfully slow to materialize. Years after his release, the vast majority of it remained unpaid. By 2018, prosecutors said he still owed close to $97 million. They claimed he had earned millions from speaking and writing and pocketed it instead of paying back the people he ruined. A judge ordered him questioned about where his money was going. Because after prison, Jordan Belfort did not disappear. He reinvented himself. He wrote a memoir published in 2007 and called it The Wolf of Wall Street. He became a motivational speaker, charging tens of thousands of dollars per appearance to teach audiences how to sell, how to close, how to win. The convicted fraudster had repackaged himself as a guru of success. And then in 2013 came the part that made him a household name. Martin Scorsese directed a film based on his memoir, with Leonardo DiCaprio playing Belfort. The Wolf of Wall Street was a global sensation, grossing more than $400 million at the box office and becoming Scorsese's highest-grossing film. The yachts, the drugs, the money, the madness. It was all there on screen, dazzling and seductive. The film made Jordan Belfort famous. It made him a brand. Audiences laughed and cheered at a man who had spent years robbing ordinary people of their savings. But the 1,500 investors he defrauded did not get a movie. They got a fraction of their money back, and a long wait for the rest. And that is the uncomfortable truth underneath the glamour. The Wolf of Wall Street was never really a story about success. It was a story about a man who stole a fortune, served less than 2 years, and then got rich all over again by selling the story of how he did it.